bias and entry are the only difference about bias versus entry is like you're not placing a trade on that idea. You're operating within it and placing trades like you're kind of dissecting it because
you're taking a magnifying glass and zooming in and trying to find the best entry. That's the thing is you're not. And I see a lot of people messing up on the lower time frames. Like they see a market structure shift and it's completely in the opposite bias of where the monthly chart, the quarterly chart's going.
Yeah.
Right. So when you get a really strong trend, especially when there's like a global macro event behind it, right? The war in Ukraine. Right, the euro was literally down like 9 months or even longer. I think 12 months in a row. It's like if you're trying to go long in that market, you're getting cooked.
Yeah,
you know, like every other day, you're probably getting cooked. It's just sell it above the opening price, whether it's the weekly opening price, whether it's the daily opening price, whether it's the 4-hour opening price. If you get an entry above the open price of that candle and it closes down the next by the
you're not already that complicated.
Yeah, exactly.
Yeah, you know?
There's only so much simplification that you can do in trading. Like I think we try and simplify things as much as possible, but we kind of forget how hard it is for people to manage or to get comfortable with their emotions. Yeah, like that's something that you can't simplify.
No, yeah, right? 100%. Yeah,
because a lot of times you can't keep, and you probably know as well because we're both educating people, right? I think the hardest part is keeping people on track to do the process, even if they're in a rut, right?
Yeah, because they hit those speed bumps, man, and it's easy to get jarred, like especially when you're new. A common question I'll get from people is, like, hey, this trade lost. What did I do wrong?
Yeah, I see a lot of posts about that. And it's like honestly, probably nothing. Yeah, it's just the market.
Normal. Yeah, exactly. Like sometimes, I get it. Sometimes when you're very new and you're just like, hey, what did I do wrong? Like, and they have like a random candle marked as order block. I'm like, okay, you did do something wrong here. But most of the time, it's not that. Most of the time, it's just like you didn't do anything wrong. It's part of it. And like
some
this
people,
might happen
you have to
tomorrow.
be comfortable losing. Like, have you heard of Richard Dennis?
That sounds familiar. But
I think the book is called The Way of the Turtle or something like that. The Turtle Traders. He's like this multi-millionaire. I think it was back in like the 80s or the 90s. He took like 10 or 20 of the most random people you could possibly find on the street and turned them into like multi-millionaire traders. Really? And they only had like a 10 to 15% strike rate.
Oh, was he the guy that was was he from? Where was he from? Was it South?
I honestly don't know.
There was some guy that was like, I know that Tom Hugard talks about that had like a crazy low strike rate.
Oh, maybe it was Richard Dennis.
I don't know. It might.
But like, imagine being so comfortable losing that your strike rates are like 10, 15%, and you still end up as a multimillionaire. Like, that's the difference between people that understand probability game, right, and skewed risk reward versus people that don't.
Yeah.
Right.
Yeah. No, for sure, man. And